My name is Munaf. I'm a financial planner with Gradage Mahura Investments. I've been practicing as a financial planner for over 10 years and I specialize in investment and retirement planning. This is my fourth video in a 6-part series that I'm creating on tax saving strategies at retirement. If you haven't watched the first 3 videos, you can find them on our YouTube channel. In this video, I'd like to talk about the importance of determining the exact tax-free portion that is available to you to withdraw as a lump sum from your retirement savings at retirement. What many people are aware of is that as per the retirement tax tables, you do have 550,000 Rand that you can withdraw as a lump sum from your retirement savings, and that's the tax-free portion. However, what many people are not aware of is that the tax-free portion that is available to you could be higher or lower than the 550,000 Rand. So in this video, I'll share why it's not ideal to not know your tax-free portion that is available to you at retirement and what the potential costs could be in terms of tax and even on your peace of mind. And then I'll share some of the common reasons on why that tax-free portion can be different. And lastly, I'll share the solution to determine the exact tax-free portion that is available to you, thereby enabling you to optimize on your retirement income planning. So the consequences of not knowing your tax-free portion that is available to you at retirement are possibly quite apparent. Say, for example, if you only have 100,000 Rand that is available to you as a tax-free portion, and when you do your retirement income planning, you submit the instruction to withdraw 550,000 Rand. You're expecting to receive the full 550,000 Rand, but because you've only got 100,000 Rand that's available to you as a tax-free portion, you'll pay tax on the balance of 450,000 Rand. And for example, instead of getting 550,000 Rand in your bank account, you may only end up getting 450,000 Rand in your bank account, which is not an ideal situation because you possibly would have had plans for the lump sum, whether it's to pay off debt, traveling, or even as an emergency savings. So it's not ideal to get far less than what you anticipated. Another scenario would be where you don't need the lump sum withdrawal because you've got additional savings, but generally a financial planner may recommend to withdraw the tax-free portion because usually it is tax efficient to withdraw the full tax-free portion that is available to you at retirement. But say in this example, you've only got 100,000 Rand available to you and you go ahead with withdrawing the 550,000 Rand as a lump sum, you'll now incur a tax liability that you did not need to incur in the first place. On the flip side, you may have a tax-free portion that is higher than 550,000 Rand that is available to you. But if you only draw the 550,000 Rand, then that often may not be the most tax-efficient approach to take because often you would want to draw the full tax-free portion that is available to you. That often is the more tax-efficient thing to do. If you've watched my second video where I talk about drawing an income from discretionary funds and compulsory funds simultaneously and how that can achieve tax efficiencies, or my third video where I talk about investing offshore in a tax-efficient way. For both those strategies, an additional portion that you can get as a lump sum withdrawal from your retirement savings, that additional portion could be used towards the strategies talked about in my second and my third video. So drawing the full tax-free portion that is available to you at retirement in most cases will be beneficial to you and will allow you to be more tax efficient with your retirement savings. So what are some of the common reasons on why the tax-free portion can be different to the 550,000 Rand that is shown on the retirement tax tables? I'll first share some common reasons on why the tax-free portion can be lower than 550,000 Rand. There are 3 common events that would reduce the tax-free portion that you have available at retirement. And all 3 are based on the same principle, which is that the lump sum tax-free portion that's indicated on the retirement tax tables, that 550,000 Rand is applied per lifetime. It's per individual, it's not per retirement fund product. So the first event is any withdrawals that you've made before retirement age. So in your 20s or 30s or 40s, if you resigned from your employment and you withdrew your retirement fund, that withdrawal would have an impact on the tax-free portion at retirement. The second event is if you made a lump sum withdrawal from a retirement fund product at retirement age. So say, for example, you turn 55 years of age and you have a retirement annuity and you make a lump sum withdrawal from there at your retirement age now. And you're still employed and you continue until age 65 and then you retire from your retirement fund with your employment at age 65. That lump sum withdrawal that you made at age 55 now, that amount will impact the tax-free portion that is available to you at age 65. And the third event is if you've been retrenched previously and you've received a severance benefit, that severance benefit is not taxed as per the marginal tax rates, it's taxed as per the retirement tax tables. And that severance benefit will utilize the tax-free portion that you have available to you. So when you reach your retirement age, if you've already used that full 550,000 Rand because of the severance benefit, then that tax-free portion will not be available to you at retirement. In terms of the tax-free portion being higher than 550,000 Rand, there are two common events that I'll talk about that will result in this. The first one is that if you're a member of the GEPF, the Government Employees Pension Fund, if you're a member prior to 1st of March 1998, then on this date, there was a change in rules of the tax treatment of the GEPF. So everything that you would have accumulated within the GEPF as of 1st of March 1998 will also form part of your tax-free portion at retirement. The second event that would lead to you having a higher tax-free portion at retirement, and the more common one, is when you make excess or disallowed contributions to a retirement fund. What are excess or disallowed contributions? So with a retirement fund, you can make a contribution to a retirement fund and then that contribution acts as a deduction on your taxable income. And it essentially reduces your taxable income, which results in the tax rebate or the refund that you get from SARS. But there's a limit to that. And the limit of what you can contribute to a retirement fund and then get as a deduction against your taxable income, the limit is 27.5% of your taxable income up to a maximum of 350,000 Rand per year, per tax year. So it's the lower of 27.5% of taxable income or 350,000 Rand. That is the maximum that you can put into a retirement fund and get the deduction against and therefore get the refund from SARS. But if you've made contributions in excess of the limits, these contributions are then referred to as excess or disallowed contributions. And these contributions can form part of your tax-free portion at retirement, thereby increasing the tax-free portion that you have available at retirement. All right, so I'm sure you can see now that there are various events that will impact the tax-free portion that you have available at retirement. And often these events can occur several decades back. So it's very difficult to remember any withdrawals or excess contributions that happened so far back. So what is the solution? Fortunately, these days you can get a tax directive simulation from SARS. Then with the tax directive simulation, you can do some calculations and determine the exact tax-free portion that is available to you at retirement. So very important, very crucial, highly recommended to always get that tax directive simulation just to make sure before implementing your retirement income plan. I can't tell you how often between myself and my colleagues where we've had discussions with clients who are retiring, and from the discussion it seems that there are no previous withdrawals or excess contributions, and therefore it should be the standard 550,000 Rand that would be available as a tax-free portion. But we still do the tax directive simulation just in case. And in so many instances, we see that tax directive simulation coming back with either a tax-free portion that's far lower or much higher than the 550,000. And with that information, we can now prepare the client we can now plan accordingly and structure the retirement income plan accordingly and make informed decisions. All right, that's my 4th tax saving strategy at retirement. If you have any questions, do feel free to contact me. I'll have my next video out in the next couple of weeks. Till then, keep well. Goodbye.